pitches, everything's included.
All right, traders, welcome to today's recap. This is Christian Roberts, Tribeca Trade Group, and this is your option and market recap for Tuesday, May 15th, the 15th of the month. So halfway through the month of May, and I always start with the S&P chart just to kind of point it out, but I actually drew a new line here with a new point here. Yeah, I mean, I guess we could kind of say that we stalled out here. Notice this version point of control from last week is also, we went a little bit higher than it, but pulled back. So all in all, I think just a pretty orderly pullback. You know, keep in mind, we talked about this yesterday too. We had a really nice swing last week. You know, I was out of the office on Friday. It looks like something's wrong with my Thinkorswim, but I'll just keep talking while this refreshes. But you know, I was out of the office on Friday, which I thought was really useful for me to do, considering that that basically I had a great week last week, and I didn't really want to trade anymore. You know, towards the end of the week, I thought we were short-term overbought, which we were, and we've come back in here. One line that's a little bit revealing here. So first of all, equities did not finish on the lows, which might set up well for tomorrow. Also, take a look at that S&P chart that I just showed here on the hour bar. You know, we started the week. This is, by the way, this is the value area for the week. You can find this on the 1 hour bar if you have the market webs that you've purchased from Tribeca Trade Group. And which, you know, look at what we did last week too. We started the week above value. We pulled back a little bit into, I think, what, Tuesday, and then we went. So this week was a little bit different. We started the week much higher. I didn't think there was much edge kind of on, you know, on Monday, regardless of what kind of option activity, which we saw, which was pretty good yesterday. But now we've fallen in here into support, and support held pretty nicely. You know, we did, I think we got 1 or 2 bars here, hour bars, that were in value. But look at the support here. So it could make for next week. Let's see what we do tomorrow. I think we got just a little bit of the froth taken out of the market. You know, I could talk about a couple other things. IWM, which showed some strength. I think IWM closed positive for the day, believe it or not. So I talked about how that wasn't the best looking sign yesterday. You know, small caps touched a high, but came back. But I said, as long as they kind of hang out here, and they actually showed some nice strength. They were basically flat for the day, so no harm, no foul there. On a day where the Qs were down about 1.5%, and they did climb back right at the end of the day. So again, I like how we finished.
This may make
finished out the day. If we would have closed on the lows, I would have said, okay, maybe we've got, you know, another day of volatility. But you know, closing off the highs, I think, is a pretty good sign. I think no harm, no foul there in the Qs. You know, here's your reversal bar in the Qs. That was yesterday. And you know, as I mentioned, I tweeted this out yesterday. I thought there was a decent amount of reversal bars. But you know, sometimes it just lasts a couple days. It's, you know, just a sign that we were going to have weakness today. We had it. We'll see how we build for tomorrow. If we don't recover tomorrow, I think the end of the week will be pretty bright. You know, again, I think technology was overbought. So what did we see today in option flow? Not much overall. I was kind of waiting and watching this afternoon. I'm like, let's see if somebody buys something, you know, on the dip today. That really didn't come. You know, Friday is option expiration. A lot of orders that, you know, some of them look like they were bought for Friday, but I really think most of those orders, which I'm not going to rehash with you, but I think a lot of the orders that we saw today were unwinding.
Let's get a recap of today's market
Fridays. I don't think anybody's really putting on big trades for weeklies. Sometimes there's a little bit of some bites that people are taking for speculative stuff, but people are not putting on big trades, in my opinion. For options expiration, they're taking them off. So keep in mind, I think that's what, you know, in your portfolio, if you've got anything left on for May, I think I would not really be holding it personally much further into the rest of the week. You either want to be rolling positions, killing them completely, or if not, you've got, you know, I guess hope in the positions that you've got left. But, you know, that's my take. I never really hold anything that's got value to it, you know, past the beginning of the week.
And now the dollar's really strong.
You know, a couple things that you could have thought about today.
and B,
you know, one of my favorite sectors,
I'll
just kind of share with you what I kind of looked at today, has been software. Software really got beat up yesterday, which again, all well and fine, do for a pullback. These things can't go up in a straight line. But I think at this point, you know, what you could do on these pullback days, which we talked about towards the end of the day, is selling a little bit of premium. I did that in Amazon. You know, I think Amazon is one of my names, one of my go-to names at this point. You know, whenever we're down a little bit, could Amazon go down a little bit further? Yeah, I mean, it could. It could break that 20-day moving average. But, you know, the earnings that Amazon had, I think it's best in breed at this point. Anytime that Amazon is down, you know, over 1%, I want to kind of act a little bit on it. So I did sell a little bit of put spreads out in the beginning of June. That was one trade that I did today. You know, I also added a small win. So I'm always happy to tell you what I did today. I added a little bit of win today. I think win was a little bit oversold on the sports gambling yesterday. So nice swing up, move down into support, into that top of value hammer bar on the top of the value area. And I went ahead and put on a trade there in win. But so, yeah, I mean, I think you can either do that with, you know, selling premium on a day where we're down, you know, we were down 1.5% in the Qs. You can kind of pick some of these names that have been really strong. You know, unfortunately, some of these names. So you could use that IGV ETF, even though it's kind of it's a tough name to trade in options. But a lot of these other names that I like, that may have maybe one more day of a pullback to them, or you know, maybe a little bit more, but on the radar.
So this is fiscal
Vive,
stimulus.
this reports earnings in a couple weeks. I think Salesforce reports in a couple weeks.
That you don't think
Adobe had a nice comeback today.
In terms of people's growth
but a lot of these names report in a couple weeks. You know, I mean, these names just hold up so well. Nice hammer bar, didn't even get down to the 20-day moving average. So again, really nice strength.
I mean, the Fed is also
that and retail. You know, retail has also been doing pretty well. I think people are thinking that, I don't know, maybe the expectations are too low for some of these names going into earnings. That was probably the trade of the day in options activity. And it wasn't just in the ETF itself.
Because one of the stories with Q1 earnings, which we're sort of wrapping up now, is they were fantastic. Nobody denies that, but there's this fear that it's the high watermark.
But here's the trade. This was over a $1 million order. June 1st, so very short dated.
What do you think
about if you look at the next couple of weeks, we've got some all of retail, not all, but most of retail reports. There it is. Sweep and open, $1.1 million premium. So either somebody's hedging their shorts, or maybe they're speculating to the upside in the XRT ETF. I do think this is a very constructive looking chart. I think I talked about this yesterday, put it on Twitter yesterday. I'm in a small position. I'm in what's called the limited risk reversal on long calls, and I'm short a put spread
one of the big questions for this year.
I think it looks pretty good. I don't know what's going to happen for earnings,
is it going to translate to inflation?
It is popping out here and definitely outperformed in the down tape, up 30 basis points. You know, other names that we're seeing some call buying yesterday was Urban, which I think looks fine. You know, close to moving out there. KSS has been a name that we've been seeing some call buying. You know, nice couple of days. I don't know if I really like Kohl's, but the chart does not look bad, I have to say. You got a nice flag here for Kohl's, so it is what it is. I guess if you could just cover up the symbol and just look at the chart, it does not look bad. A couple other names, Disney. I thought this was pretty sharp. You know, personally, I said maybe wait till this gets above the 200-day moving average. Tough looking chart in my opinion, Disney. So I did not take that trade. You know, again, you can't take every trade, and if it's something looks hard or challenged to you, you can always do something else.
Of course, 3.9%.
A couple other names, TPX, another retail-ish name. IQ saw some weekly calls go up. BGCP, I would say also probably one of the most interesting trades that went up today. By the way, Hershey chatter calls went up today as well. HBI saw calls yesterday. GameStop, which you know is kind of
we like to look at ECI, although the sample size of ECI is
short
small.
squeeze territory.
It's small relative to the average hourly earnings.
Had a nice move from the lows.
adjusted
so, I don't know. Not exactly something that I would want to play, but probably pretty cheap. Another chart that looks, if you want to go bottom fishing as well, BGCP. This is BGC Partners.
But the more important thing is
very ugly looking tape is broken down below the 200-day moving average. But look what they did today in options. So again, this is how bad the option activity was today. But you know, November 12 calls, maybe somebody's thinking that there's some value here. They went ahead and bought 11,000 of these, all said and done, mostly midday in that.
That's also high. I mean, so you look at a variety
and that's
of
basically it today. A little bit of Under Armour calls today, just very, very quiet. BAC calls, I did take this trade as well, so I put somebody to work today. I thought that, you know, with banks, you know, again, should benefit with higher rates. You know, so here's what TLT looks like. I think this was one of the stories of the day. It did finish off the low, so it is still holding the support back from. You know, did not take out this purple line, this version point of control, but finished down 1.1%.
Actually get to those 4 because there could be
also, IEF is the 7 to 10 year. This looks a little bit different. This did take out a version point of control. A little bit different. That 7 to 10 year duration looks a little bit different than the 30 year. The other story was plus 20 year, which is TLT. So again, that's IEF versus TLT, a different looking chart there, even though they're both longer dated.
How concerned are you?
And then this was the other story of the day today, the dollar getting stronger again. This is going to wreak havoc if you have any international ETFs, unless they specifically say that they're hedging out the dollar, you are essentially short the dollar. So not too happy about this candle today in EM. I've been long EM, and now it just, you know, completely got annihilated. A lot of that has to do with the exposure that it has to the US dollar. Again, if you're long EM, you're essentially short the US dollar, right? You own a basket of local stocks with that EM, so you're synthetically short the US dollar. So that's back below the 200-day moving average, back where it was. So we'll just have to monitor that. A couple other things, you know, any ETF, again, that's international, that does not hedge the currency, which that's about 95% of them, they're going to take a beating on days like this when the dollar goes stronger. What else outperformed? OIH, regional banking ETF, finished off the highs, but up 60 basis points. There was a spread that also went up in KRE. The builders, they got absolutely smoked today. They are really moving. It's kind of like an earnings report. You know, if you just kind of meet expectations, you're getting crushed. Same thing with these home builders. If interest rates just start to move a little bit, they're getting absolutely crushed. So really sensitive to interest rates. That's the ITB ETF. You know, broke out of that range. Things like DHI completely got annihilated today. There was a DHI order, but went up versus open interest in January. Have to check it tomorrow. So that's it. Besides a couple of things really getting beaten up, I do think a little bit of an overreaction to interest rates. I mean, literally, the press is so much is so over interest rates. You know, when bonds rally and rates go down, they talk about a flattening yield curve and how that's dangerous. When yields go up, like they did today, and bonds sell off, you know, that's usually a healthy thing. But you'll say, oh my God, you'll hear on on the financial press that it's horrible because interest rates are going up. So it's almost every other day where it's either oh my God, the yield curve is flattening, or oh my God, the yields are going higher, which are completely two different things, right? But it just shows how much the financial press is trying to brainwash you into making a mountain out of a molehill. So anyway, that's the end of today's video. Have a great night. Again, we talked a lot about selling premium. I did that with a couple names. We went over all that in the trading room today. Happy to answer any questions you have if you're a member of the Tribeca Trade Group. Thanks very much. Have a great night. See you tomorrow.